Hi, everybody. This is Alan Ellman, the Blue Collar Investor, and welcome to our Beginner's Corner Information Series, second edition. This is lesson 4, stock selection using common sense principles. If you recall in lesson 3, we were also looking at stock selection, but we'll be basing it on the first two prongs, fundamental analysis and technical analysis. In this lesson, we'll look at common sense principles, the third prong of our stock screening process. Let's first list the common sense principles used in the BCI methodology for short-term option selling. Number one, and probably the most important, is to avoid earnings reports. So we never sell an option if there's an upcoming earnings report during that contract. If we're using monthlies, then chances are we're not going to hold the stock in our portfolio for more than 2 months in a row. And there are certain ways of circumventing this issue, and that's detailed in our books and DVDs. Second common sense principle is to avoid companies that report same-store monthly retail sales. There's only about 8 to 10 companies that report on a monthly basis. There used to be over 80, and that's gotten less and less and less. Most report quarterly, but some stocks do report every month, and those stocks are banned because these retail sales reports can act like earnings reports and cause a stock to go down in price significantly if it disappoints, just like a disappointing earnings report. So we call these banned stocks. Now, we've also banned all of the airline stocks because the airline stocks have what's known as capacity reports. What percentage of available seats are sold that month? And if that number disappoints analysts, then also it can take the price down. So we avoid all airline stocks. Later on in lesson 4, I'll show you how you can get a free file of all these banned stocks. And the BCI team is constantly updating that file. Another common sense principle is to make sure the minimum average trading volume is at least 250,000 shares per day. This will guarantee that we have decent liquidity with our option trades so that pricing will be favorable to us. The next, stock and industry diversification. We don't want to use the same stock for all of our portfolio or just a couple. We want to diversify so that no one stock or industry should represent more than 20% of our total portfolio, and preferably a lot lower, depending on how large our portfolio is and how much cash we have to invest. And finally, cash allocation. So we try to allocate a similar amount of cash to each position. We could never get it precise, but we could certainly come pretty close. So let's go back and review each of these. Avoid earnings reports. A disappointing earnings report can pull the price of the stock down dramatically and basically ruin all the option premium we sold that month. So it's a risky event. We just want to avoid it. And we can find out when the earnings reports are by visiting various sites like earningswhispers.com. That's what we use for our members, for our BCI Premium member reports. And although it's not 100% accurate, it's pretty close and one of the best that I've ever seen. So that's the most important of these common sense principles. Now, stocks that report monthly same-store sales statistics, you won't find that any place other than in the BCI site. And as I said, I'll show you where to get a free copy of that at the end of this lesson. And we call these banned stocks, so we should never use them when selling options. Minimum trading volume. The average trading volume should be greater than 250,000 shares per day. And also the options that we sell. We don't want options that have very low liquidity. And when we talk about liquidity, there are two categories we could look at. We could look at volume and we could look at open interest. My personal preference is open interest because that's an ongoing statistic. Volume is reset to 0 every day. So in the BCI methodology, we want to see an open interest of at least 100 contracts and or a bid-ask spread of 30 cents or less. We'll get into bid-ask spreads later on in this series. So when we're talking about volume, we're talking about the stock. We're also talking about the option we sell against that stock. Now here's a screenshot of an option chain showing you where open interest is. Most of them are in a similar place, but you see open interest here, I highlighted in brown, and the number of contracts that were open at the time I made this screenshot was 1,020, way higher than the 100 that we require. So you could see the others, here's 1, here's 7. The others didn't quite make it. So we also want to be careful that when we sell an option that has good liquidity, so that if we have to buy back the option, we'll get some favorable pricing. Now, as far as stock and industry diversification, if we have too large a position with a stock or an industry, and that turns unfavorable, it can impact our entire portfolio in a very big way. So we want to have a minimum of 5 different stocks, minimum, in 5 different industries. No one security should represent more than 20% of the entire portfolio, and preferably, as I said before, much less. Now, in the premium stock report that we provide to our members, we do have industry information. We name the industry the stock is in, and we rank the industry at that point in time. So, for example, if you have a stock that's in an industry ranked D, you may, even though the stock is doing well, you may want to avoid that stock. Now, another way to diversify, particularly for those that are either just starting out or have very little cash to invest, exchange-traded funds is a way to go. I use these in my mother's portfolio. And an exchange-traded fund is like a mutual fund. It's a basket of stocks, but it behaves like an individual stock in that you could trade it during the course of the day, and many of them have options associated with them. So that's a good way to diversify, so you don't need quite as many positions or as much cash. And we also provide a premium ETF report to our members. All right, let's have a look now at the cash allocation. This isn't too complicated. If we had a portfolio of $50,000, we wanted at least 5 stocks. That means we're willing to allocate $10,000 per position. Now, if the price of a stock is $10, that would mean we could buy 1,000 shares. That would mean 10 contracts, since each contract represents 100 shares. Now, what if the price is $30? Price is 30, and we divide that into 10,000. We get an odd number, not in a 100, 333. So what we do is we round it off to the nearest 100, which in this case would be 300, which means we're going to sell 3 contracts. And that's how we figure out our cash allocation. First, how much cash is available, divide the number of stocks we're looking at. In a small portfolio of 50K, if we're doing stocks, we would want at least 5 stocks. If we had less than 50K, we would use ETFs. And then we just figure out how much we're going to allocate, divide the price per share into that number, and round it off to the nearest 100. There we have how many stocks we buy and how many contracts we sell. Now, the premium report we provide to our members also have common sense information. Here you see the industry the stocks are in, the rank of the industry, earnings report information, option liquidity, open interest. So the report contains all that information for our members, making it very easy to make your stock selections. So let's summarize stock selection now. In lesson 3, we went through fundamental analysis, technical analysis, and in lesson 4, we went through common sense principles. So it's a 3-pronged approach to stock selection. But stock selection represents one of the 3 required skills needed for option selling, in this case specifically for covered call writing. So the required skills, just to reiterate, because it's so important, stock selection, then option selection, and then position management. We're going to get into all of that in the upcoming lessons. Now, I promised you where you could get that file for banned stocks. Go to the website, look in the top black bar for the free resources link. You put in your name and email, and you can download that list along with a lot of other free resources, including calculators and other files. All that's free by clicking on that link. So that takes care of lesson 4 and also ends the lessons on stock selection. So in the next section, we'll move on to options. And I hope you enjoyed this. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.